Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Franco-Nevada stock so we can determine if it's a buy or a sell. Franco-Nevada is a gold-focused royalty and streaming company. In 2002, Newmont acquired 100% of Franco-Nevada, and then in 2007 they spun off Franco-Nevada in an IPO. Since that IPO, Franco-Nevada has grown substantially through the acquisition of existing royalties, but also by acquiring precious metal streams, mainly in gold and silver. They also have oil and gas royalty interests, mainly in major US oil and gas fracking basins. The company is headquartered in Toronto, Ontario, Canada, and was founded in 1983. Let's get started with the model. This is a large cap company, 31 billion market cap. They're trading at $157 a share, and they have 195 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow did grow a lot in 2022, its highest ever, $858 million. Net income is the profit or loss on the income statement. It's revenue minus expenses, and that more than doubles from 2019 to 2022. Revenue is the sales for the company, and that grows each year from $844 million to $1.3 billion. Let's look at the capital structure. They have $6.4 billion of equity and no debt, so they're 100% equity. And it looks like they have $1.2 billion of cash on their balance sheet. I gave them a WACC of 9.3%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $19 billion. We discounted those numbers back to today using the weighted average cost of capital, and we get a value of the company of $16 billion. We divide that by 195 million shares. And we get a calculated stock price of $83. They're trading at $157, so they're trading at an 88% premium. It's a really strong sell according to the model. Simply Wall Street is right with me. They're at $69 a share. They say it's even more overvalued. 9 analysts priced this stock, and the average price target is $161. The low is $127. The high is $180. Another 11 analysts priced this stock, and the average price target is $161. They say it's 3% undervalued. This is where the stock has been trading since they IPO'd. About 1 year after the IPO was the Great Recession, and the stock came down below its IPO price. But ever since then, it's pretty much only gone up. There was some dips here and there, but overall, it's pretty much only gone up. The highest point was about $190 a share. It did come down to about $120, but if you held the stock for at least 6 months, you should have made money. Unless, of course, you bought it here. Then you might have to wait another year or so to get your return back. They pay a quarterly dividend, and they raise it each year. It was 24 cents in 2018, up to 34 cents currently. It's a really low yield, under 1%, which is 38% of their net income, 31% of their free cash flow. So they do have room to raise their dividend. There are 43 companies in the same industry as Franco-Nevada. If they have a number in red, they're worse than the median. If they have a number in blue, they're better. They don't spend much in CapEx, since they're a royalty company. They don't have any debt, so they have a good debt to equity ratio. They pay a low dividend, under 1%, which is a little higher than the average, lower than the median. They generate lots of free cash flow. They rank third in market cap. Only Newmont and Barrick are higher. Their ratios aren't so great. Their price to free cash flow equals the median, and it's a little better than the average. But the other ratios are worse than the average and median. They don't generate much revenue for the size of the company, but they are growing at a 14% annual revenue growth rate, and they have a high ROA and ROE. So to summarize, I have them trading at an 88% premium. I rank their free cash flow 7 out of 10, their revenue 6 out of 10, and their ratio is 4 out of 10. So let me know what you think. Give the video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.